Hey, welcome, Todd.
Thank you, Matt. Good to be here.
So we are here today with Todd Libby from Three Keys Lending. You are a loan officer. You're not a lender, per se. You're a loan officer.
Right.
Okay. I think sometimes people think, well, you're the lender. It's your money. It's your bank.
Not my money. I'm a broker in the sense that, so I work with multiple lenders and find the best fit for the client.
Okay. So and just to be clear, so that's what a mortgage officer, loan officer does, is when you're working with a client, you are finding the right lender, bank, whatever, with the right terms to fit the client's needs the best.
Yep, that's a good way to put it.
Okay, all right. Well, what I thought we would do today is, part of my job as a real estate agent is to bring as much value to my clients as possible. And I think one of those things is to introduce them to the right servicers for this process. Whether it's a title company, a home inspector, loan officer, that kind of thing, so that they're not just out in the Wild West trying to figure out, well, who do we go with? And they click an ad, and the next thing they know, they're getting a bad loan. Mm-hmm. So what I thought we would do under that premise is let's talk about what the process is from someone who is thinking about buying a house, and they don't have the cash. They're going to have financing for it. So that point to the, hey, congratulations, you're a homeowner, here's the keys. And as we go through this process, these steps, let's talk about what a good loan officer provides, value-wise, and maybe some things that they ought to look out for.
Okay.
Okay.
I think starting out with the process and what an experience for a person looks like with a good loan officer. Number one is going to be, I think, communication. How the loan officer should be explaining things to the client, what things are going to look like, what things are important. We're going to talk about credit. We're going to talk about income. We're going to talk about the down payment and look at various many options for them.
Okay.
Ask lots of questions to the client of what they're looking for, what's important to them.
So, and I'm going to stop you here at certain points, but are you asking questions so that, I guess what I'm assuming here is, there isn't just one loan that will fit their circumstances.
Mm-hmm. That's a great point. There isn't just one loan, and there's not just one rate either. When people say, well, what's today's rate? It depends on so many factors and what's important to that
short term and long term.
Right, yeah.
Okay.
So that's why asking lots of questions to the client is super important, understanding what are their short and long term goals with this purchase. This is going to be probably the biggest debt that anybody will get into.
Sure.
And so it's important that we manage it correctly.
Yeah. Okay. So let's start with step number one.
Okay.
Someone's online looking at a house, or maybe they've called me and we've looked at a house or whatever, and they've determined, okay, we're serious about this. Obviously, financing is a big part of buying a home, and especially as we're looking for homes and negotiating with sellers. The sellers want to know, well, how are you going to pay for this before we get too far down the road? Okay, so someone calls you and says, hey, we're thinking about buying a house. What happens right then?
I will plan about a 30-minute conversation, kind of an exploratory call with them to find out what they're looking for. We're going to go through all those three things that I mentioned: credit score, talk about their income, self-employed people, have a few additional challenges, if you will, but we can always work through those.
Okay.
And then how much they're thinking of putting for the down payment. Okay. So I think that's usually the initial conversation has to do with those three keys. Which actually, I know, I'm not trying to...
No, I get it. But those are the big three pillars that base moving forward.
Mm-hmm.
Okay.
And it sets the path of which direction we can go with them. Because if they've got... I don't know if you want to be a specific example. If somebody may not have maybe the best credit, they can still qualify for a loan. We just have to know which loans to go looking for.
Okay.
But then a good loan officer will look at that credit score and say, how can we improve that? Because even just a 20-point bump on a credit score can save somebody thousands of dollars.
And you're talking about something that they don't have. We're not saying wait 6 months. Mm-hmm. We're saying you could probably make some changes in the next few weeks and get a bump.
Exactly.
Okay.
Yep. just a few strategic things of paying something down. Find out when that credit card reports, for example. Pay it down right then, and you can see I've seen 40-point swing on stuff, and that 40 points can literally save a client thousands of dollars.
Right.
So,
okay. So at the very beginning, you set aside time. I mean, you're a busy guy, but you'll set aside 30 minutes just to have a conversation with somebody. No obligation, no commitment, anything like that. Okay. So what should someone watch out for if they're calling around and they get somebody on the phone?
Oh, good question. What should they? Maybe some red flags.
Yeah.
I think if they're feeling like they're being led, or maybe not being listened to,
okay,
then if that loan officer is trying to tell them exactly what they need to do, hey, do this, go fill out an application right away.
Right.
I almost discourage somebody from filling out an application right away until I've talked with them.
Sure.
Until we know what's going on. Is this the right thing? What are they looking for? Let's take our time. This is a huge decision.
Huge decision. And it doesn't move super fast. I mean, it's not like you get your financing tomorrow.
Right. So I think that would be a red flag.
What about if they call up and the guy's like, oh, I can get you 5 point whatever. I mean, right off the bat without any conversation. Is that something to watch out for? Or?
Yeah. Obviously, I mean, rates will depend on so many different situations. If somebody's talking about rate really before knowing much about that client, then they're making a ton of assumptions, and that's just when we're talking about this large financial decision.
With so many variables,
so you really want to know all of the things going into it. Trying to think of what other red flags.
Well, I mean, okay, so they've called you up, had a conversation, and they feel comfortable with you. Mm-hmm. Okay, or they find a loan officer that they feel comfortable with.
Yeah.
Okay. I would think the next step is they need to have a home that they want to purchase, that kind of a thing. Now, in the previous couple years market, they pretty much needed to have at least a letter from a loan officer saying, hey, we've looked into their financial situation, or we've run credit or whatever, and they're good to go for a home up to this amount, something like that. Okay. Or in that 30-minute conversation, do you have enough information to be able to furnish them with a letter like that, or does that go deeper?
For the letter, we definitely need to go deeper with that. At that point, if I'm running into this right now, if they have, they want to go looking at houses, I want to make sure that their time and your time as the realtor is protected. So at that point, we will run credit. Okay. We will gather income documentation, find out exactly where the down payment's going to come from. Okay. And so before anybody goes out looking at a house, they really should have those things taken care of. A 30-minute conversation is enough to know if we're on the right track.
Right.
But in order to actually have a pre-approval letter, they need to have credit pulled. And that would be the next step. After that initial conversation, the next step would be, okay, if you're ready to start looking at houses, fill out the application, provide that documentation, and a good loan officer will then run it through what's called AUS, which is an automated underwriting system. Okay. You may have heard of that. Uh-huh. Clients won't know what that is, but if you want to educate your clients on that, when they're talking to the loan officer, ask them, has it been run through? If they pull out the AUS, that'll blow away the loan officer. Okay. And make sure that they're doing their job correctly, because things may look right, their debt-to-income ratio may look right, but you really need to run it through AUS to make sure that it's a real legitimate approval.
All right. So they've done that. We've got a letter in hand. We found a house that they like. I'm doing my job now of putting in the offer and negotiating with the other side. What can a good loan officer provide in that portion of the process?
A good loan officer, in my opinion, would be reaching out to, with your permission, call the listing agent. Let them know, without sharing too many. We can't share specific information unless we get permission from the client. And I've had that before, right, where I've asked the client, "Do you mind if I share your credit score?" Because to the listing agent, you as a listing agent, have you received calls from loan officers before?
Rarely.
Okay.
But it is reassuring when I talk to an agent who I can tell is professional, and they're giving me their their confidence that this loan's going to go through and the buyer has the ability to buy the house. Otherwise, I feel like I'm kind of wasting my time.
Right.
Yeah.
So again, a good loan officer will call that listing agent, maybe share them their experience. How long have they been a loan officer?
Right.
How long have they been working with that client? What documentation do they have? Have they
Sure.
run it through that AUS, automated underwriting system, that I mentioned? That's what a listing agent should want to know, and that's what a good loan officer will do. Will proactively reach out, let them know, and treat it, correct me if I'm wrong on this, I look at you, if you're representing the buyer,
Right.
the listing agent, the client, the loan officer, it's one team.
It is a team effort.
Like, you're negotiating, with the listing agent.
Sure.
But at the end of the day, you both would like to. Everybody wants to come together and provide a house for the client. If that's
Right.
what,
That's
so,
right. That's right.
To me, I look at it as we're all on the same team.
Well, yeah, and I can't do my job without you doing your job and the client doing their part. I mean, it does work synergistically together. So, okay, so we've got a letter. We put in an offer. You've made a couple calls, to the sellers or their agent, whatever, and now we're under contract. Okay, so we're kind of on the clock now with getting the loan all in place before the deadline. And deadlines are very important. This is contractual. We can't just say, oh, yeah, I might need a couple more days. I mean, you've got to get it done. So what is the next step that a good loan officer provides?
The next step would be to make sure we have all the documentation that from the buyer in, so that we can get it into underwriting as quickly as possible.
Okay.
That can usually take a couple of days, because there's some things that we'll do in the back end, whether it's the loan officer or processing, ordering title, finding out who they want to use for their homeowner's insurance agent. If there's an HOA, we need to get some information from that HOA.
And some of that timing, it's not all up to you. I mean, I think a good loan officer gets on it quick, but it might take a minute or a day for the HOA to get back information, title to do their reports and things like that.
Right. Realistically, a good loan officer should be getting all that stuff in within the first couple of days of going under contract.
Right.
So that they can get it into underwriting. I would say a week is a long time. It should be, but if it's into underwriting within a week, that's reasonable.
Okay. Now, once it's in underwriting, that's underwriting is out of your hands, so to speak. It's not you anymore making decisions.
Right. The underwriter is the representative of the bank.
Right.
Deciding, hey, is this a good loan for us to?
Right. Do we want this loan?
Right.
Right. Kind of a thing. Okay.
So our work is super important up until that point to make sure a good loan officer will be able to foresee potential issues with underwriting.
Because you've worked with them before.
Right. We know what the guidelines are. We should know what the guidelines are. A good loan officer will know certain things about. That's why it's important, going back to the AUS, the automated underwriting system, running through that piece first. Now, again, that's a system that's only as good as the information that we plug into it.
Of course.
So verifying everything. If there's a great example is on the income calculation. If we're using any overtime, how to calculate overtime. If they're self-employed, how to calculate self-employed income. If there are any large deposits going in, how to document that, and communicating with the client, setting them up to know that. This is just me personally. Sometimes I'll apologize to people asking, look, I don't make up the rules as far as what we're asking for. It's going to feel like we're asking for a lot of things. So prepping, I think that's an important part of it. The good loan officer will prepare the clients for that sort of invasive.
Well, I think a good loan officer with good experience, they know what's coming and can prepare a client, or at least they know the possibilities. I know a good loan officer will say, hey, we might need this, we might need that. Why don't you get it just in case? Those types of things. Where an inexperienced loan officer or a bad loan officer, sometimes they're one and the same, doesn't even know. And it's not until underwriting says, hey, I need this, and they're just kind of the middleman saying, oh, I need this, I need that, right this minute.
Right. So to your point of saying it's kind of out of our control, it is. Once it's underwriting, yes, they're doing their job, but our job prior to that makes a huge difference of how it comes out of underwriting.
Right. So, I mean, it's your job as a good loan officer to make it a smooth process versus, I need this. 2 hours later, I need that. Next day, I need this.
Right.
Those types of things. Okay. So it goes through underwriting. Everything's good. It's approved. Okay. Now what do you do?
So we share the good news with everybody, the whole team. Again, this is a team effort. We will let the borrower know, great, it's approved. Here are the conditions. That's basically, once we get an approval, it's not 100% done. It's approved based upon certain conditions. We need this pay stub or this explanation,
and sometimes we need things from the seller of the home, repairs, things like that.
Yep. So we'll share that information. Again, this is a good loan officer will be quick to communicate this to the borrower, to you as the representative, and also to the listing agent to let them know, hey, it just came out of underwriting. Normally what I'll say is we have normal conditions, nothing out of the ordinary. I'm not going to share with them exactly what the details are.
But put them at ease that the process is moving forward as planned.
Yes.
Okay.
Yeah. And then I guess talk through the timing of it. Once we have that initial underwrite, typically you should be a couple of weeks before your settlement deadline.
Okay.
So we're on track for a smooth and flawless closing.
Sure.
Here's what we need. Here's what's left. We still need title or the HOA, but everything looks good.
Now, in a perfect world, everything goes smooth. We're not in a perfect world, and sometimes HOAs or whoever hold things up just a little bit or whatever, and that's to be expected. Okay, but what are some things that maybe a client should really look out for, maybe with the timeline or the communication or anything like that, as we get closer to that settlement deadline?
I think they need to just respond quickly on anything that either the loan officer, sometimes it's the processor that reaches out to the borrower. Hey, we need this bank statement, for example.
Right.
And to not be not cut corners, because often we'll see screenshots from a phone of their pay stub, of their bank statement that doesn't show their name, doesn't show the full thing.
Right.
When it comes to documentation, give what they're asking for. Don't cut corners.
But there again, I think that's the job of a good loan officer to prep them for that ahead of time,
right?
So that they know a screenshot doesn't work. We need the actual document.
True. Right. Yeah, great point. Because at that point, that conversation will already have been covered.
Sure.
Here's what we need. So as far as a good loan officer communicating with the client, I think going through the numbers, as far as what that final number looks like, because once our initial loan estimate, it's an estimate. We don't know the exact number for title.
Right.
There's some fees that we know exactly what they are, but we don't know exact numbers with their homeowner's insurance. I've had sometimes the homeowner's insurance came in way higher than what we were expecting. So we'll call the borrower and say, do you want us to help shop around? Do you want to look?
Right.
Is this okay? It's about $100 a month more than what we were expecting. Sometimes.
So that's something that's a service you provide, is you're talking to the buyer about the elements of the loan, the requirements and things like that with homeowners insurance, and helping them not just grab something last minute, but hopefully have enough time to make a good decision on the right insurance, the right this or that.
Mm-hmm.
Okay.
Yeah, having that conversation and going through the numbers, what their monthly payment's going to look like. We don't want to get to the closing table and have them have any surprises on the monthly payment, the cash to close, and making sure all of their questions are answered, so that closing day is not a stressful day. It should be a very comfortable, happy day.
Of course. Okay, so we're at the closing table. They're signing all the papers. It shouldn't be any surprises there. It should just be a happy day, low stress, things like that. And now they've got their home. Wonderful. Okay, so I know from experience there are processes and loan officers who make the process a little easier or a little more stressful, that kind of a thing. But in the end, they get the house. Okay. I feel like for the client to really be happy at the end, they need to get a loan or buy the home in a way that really works with their budget, their short-term and long-term goals as far as owning the home, selling it, flipping it, renting it, all of those types of things. So I kind of feel like that initial conversation, that first 30 minutes, is pretty important, so that you understand, or a loan officer understands, well, what are they really trying to achieve here? I mean, because to just live in a home, you can go rent a home, but buying a home, and correct me if I'm wrong, but buying it one way could be more advantageous financially than buying it another way, or one loan versus another loan. Is that correct?
That is correct. Yeah, there are certain loans that are, I mean, different loan programs. Maybe for specifics, we have conventional versus FHA. FHA has some good advantages, but there's also some disadvantages that makes it more expensive in the short and long term.
Okay.
So, but it may be the best option for that client. The other piece of this that you made me think about is qualifying for a loan is one thing, but making sure it fits in that client's plans and budget is sometimes a very different thing.
Now, I think a lot of people think there are only, let's say, like 4 types of loan. You have an FHA or a VA. You have a conventional, a jumbo. But that's it. And the client has to fit. Let's say they go conventional. It's probably the most common out there.
Right.
That, okay, as the client, I have to fit into the one type of conventional loan that is out there. Is that accurate, or are there ways to structure it, or lenders to go to, or lenders to avoid based on what the client's goals are?
Yes, there are. And within conventional loans, there's a couple of subsets. We have Home Ready or Home Possible. You may have heard of those options. A good loan officer will check and see if they can qualify for Home Ready or Home Possible, because those loans are typically less expensive. They've got if they're not putting 20% down, then they'll have to pay something called mortgage insurance.
But so there's a trade-off somewhere.
Yeah.
You pay this, you don't have to pay that.
Or for those programs, there's an income limit. The nice thing with it, there's some flexibility. The underwriter may not, if they can qualify without counting overtime, awesome.
Okay.
And we can get them into that box, if you will, because it'll save them some money. So again, a good loan officer will catch these potential money-saving tactics for their clients and put them in the best loan for them.
And I do want to be clear. It's not that all people qualify for all different types of loans out there.
Right.
It does depend on your financial situation, your income, your credit, the 3 keys. So I don't want people to think, oh well, here's what I want, go get it for me. Necessarily.
Right. I mean, a lot of people will ask, well, how much do I qualify for? And some people, we've got the two spectrums. You got some people will qualify for way more than what they're going to be comfortable for.
Sure.
And so
just because you qualify for a $700,000 home doesn't mean it's the right price for you.
Right. Or some people might be pushing the other limit. We need to find ways. Either they have other income that we can't count, or there's other factors where they're pushing that upper limit of what they could qualify for. So having a good loan officer to have those questions, like, well, what's important to them? Great, you can qualify for $700,000, but here's the payment. Is that what you really want?
Do you want that payment?
And if not, well, let's find out what's. And I hate this question, because it sounds like a car salesman. But
a little bit.
What do you want your monthly payment to be?
But that is really how people buy a home. I mean, not everybody, but I would say the bulk, the majority of everybody that buys a house is, what can we afford per month?
Right. No disrespect to any car salesman if they're listening to this.
No.
But that should be a question that the loan officer is asking you. What's comfortable for you? What is your monthly budget?
Right.
And with that number in mind, here's what that would look like.
But unlike a car salesman, and I have some experience with car salesmen, a car salesman will say, well, what monthly payment are you comfortable with? And then they will arrange everything so that the dealership is making as much money as possible.
Yeah.
And you're just, oh, well, it's a monthly payment. Never mind that it's not 3 years at that monthly payment. It's 9 years.
Right.
A home loan with a good loan officer should be a different situation. And they should know going into it exactly how all those things come together with your down payment. Because maybe you can only afford so much of a down payment, but you could afford more of a monthly payment. I mean, those things all come together, correct?
Yep. Yes, they do. Absolutely.
Okay. So I guess, with that in mind, is there anything that someone out there should be wary of, knowing that, okay, there really are a few different loan options that you could qualify for? Again, not saying that everybody qualifies for everything, but is there anything out there that someone, their ears should perk up a little bit if a loan officer says this or that?
I personally, I think if the loan officer tells them, here's what you can qualify for, here's the exact loan program, in just a few short minutes, they need to find out more information
Okay.
about that. And so the client should feel like the loan officer is pulling information, asking them
Okay.
information so that they can structure the best
Okay.
loan for them.
Okay.
If there's anything
Yeah.
to look out for, I would think
Yeah.
lack of questions, lack of interest in finding out what the borrower
So,
really wants.
so it sounds like something to look out for is the loan officer pushing them into a loan that maybe is easier for the loan officer, makes the loan officer more money or their company, and maybe it is the only option for the client, but many times it's not the only option, and they should at least know what their options are.
Right. Your client should feel like that loan officer is uncovering as many
Okay.
stones as possible
Okay.
as they can for that client.
Okay, so the last thing I just want to touch on, because I see this a lot, and I see it a lot with especially new construction. They provide a lot of incentives for them to go with their preferred lender. Sometimes that lender is actually part of the parent company of the builder, things like that. And not that that's necessarily terrible, but the thing that I see that I want people to watch out for, and maybe you can speak to it, is the process is usually with a new construction, 30 days to 180 days, 360 days. Okay. But, and what happens that I see is, that's a little heartbreaking, is everything's fine until about a week before they're supposed to close. So they've got the movers, they've got family coming over, they've got their heart set on those cabinets that they upgraded, and they've paid out of pocket, for that deposit and things like that. And here the loan officer says, "Oh, something's come up. We need $11,000 more dollars for your closing costs, or we need a bigger down payment, or we need something that is not easy to get at the last minute." And so the option now is for the client, well, either jump through that hoop, and I don't fully understand why we have to do it, because for the last 30 to 180 days, this has never come up, or we back out, lose earnest money, and we don't get our home.
That is a poorly managed loan process.
Well, that's what I was going to.
Yeah.
Is that poor management and inexperience? I don't want to use the word fraud, but it's happened. Or is it, well, that's just what happens?
More often than not, I don't think it's. There may be some out there that may know of that, and they wait until the last minute, knowing that they couldn't make any other decision. For the most part, I just think it's poor management.
Okay.
That they think, oh, we've got all this time, then all of a sudden, oh wait, this is supposed to close next week. Okay, let's gather the last couple things. They weren't looking ahead. They weren't looking at those conditions.
They weren't looking after their client.
They weren't looking after their client.
Okay.
And so I don't know if we call it fraud. I think it's mostly just poor mismanagement.
Okay.
And not doing. When you have that much time, I think it's a natural tendency to figure, oh, we've got all this time.
I'll back burner this one.
Yeah.
Okay. Is that really normal? Should that be happening? Where a week before closing, I have to come up with $8,000 more, $2,000 more, $20,000 more.
Definitely not normal. Definitely should not be happening.
Okay.
They should have all that stuff buttoned down in my opinion, 2 to 3 weeks prior to that estimated closing date. Again, going through all the final numbers, going through all the final conditions. You've had plenty of time to figure this out, get it through underwriting, work on all that stuff. So my suggestion to a client would be about 3 weeks prior to closing. If you're not hearing from your loan officer, reach out to them. What else do you need?
Well, that's a red flag in and of itself.
Well, it
Shouldn't
is.
they be reaching out to you? Yeah, okay.
But if you're in that, if they have that relationship of trust, they do like the loan officer, but they haven't heard from them, and now closing is coming up in 2 to 3 weeks, reach out to them and say, what else do you need from me? And hopefully that will spark, let's get this off the back burner, and let's make sure we get everything handled.
Well, and, I think, again, that as far as one of the big things of value, piece of value that I bring to my clients is, look, they can choose whoever they want, and that's fine, but I do want them to have a smooth experience. And, I've worked with, you're not the only loan officer that I've worked with, but there are some that I really hope they don't choose because of the process, that's involved. But, part of what I want to do too is have a good relationship with their loan officer so that I can call them on a Saturday and I can say, oh, something's come up, or we found the house that is perfect for them. we're a little late getting to it. We need to have an offer in soon. And knowing that they're going to pick up their phone after 5 o'clock on a Friday or whatever the case may be. And so, again, I think that's the value that I bring is not just letting them choose anybody out there because they have a really nice ad or a cool app, but someone who's going to be there, not only when it's smooth, and they've got 800 credit and a W-2 that says I make $20,000 a month, but they're going to be there when things aren't going perfectly and they need extra things, and a loan officer who is going to shop it properly to give them the best options. So,
well, I think that's a huge value add for your clients as a realtor. You've got enough experience to know what a good experience client experience should be, and what it shouldn't be.
Right.
And so I think your clients should lean into you on that, knowing that the people that you're going to connect them with will provide that right experience for them.
Right.
Look out for their best interests. Because at the end of the day, that's what you're trying to do.
Absolutely.
Make it the best experience for your client.
I'm trying to get them into the home they want at the price that works for them in the smoothest process possible. Because I don't get anything from a lender. I just want my client to get everything that they want or as close to it as possible.
Right. And that lender relationship should mirror that as well.
Should.
Everything 100% focused on that client, getting them the best for their situation, which is why I like you as a realtor, is because I know how much you care about your clients.
I absolutely do.
That there's no question how much you care, and you can ask any of your clients, like, you go above and beyond what a normal realtor, in my opinion, would do. You're not an order taker. You're not just let's go look at this. You actually care about the why of why they're buying a house.
Well, I think in this thing, where when I think about the houses that I've bought, or I think about what that means to someone. I think about the school district their kids are going to be in, the garden they're going to plant, the memories they're going to make, and things like that. And with that in mind. It is a huge thing. It is not just order taking. It is not just opening a door and like, well, you guys let me know if you want to put an offer in, that kind of a thing. It's a huge thing. And I would say, almost 100% of the time, I become friends with these people and I know them. And that's really important to me. So it's important to me to introduce them to someone that is going to give them the same level of service that I want to give them or that I would expect, for my own home buying. So anyway, thank you so much for being here.
Thank you, Matt.
I'm going to put all your contact information in the notes below. And if you have any now, how should they reach you? Should they get online and find an app and anonymously put in some information, or what should they do?
I think for me, the easiest, maybe shoot me a text or find an email. I've got a calendar set up where they can schedule that 30-minute consultation. And just see if it's a good fit. Ask questions. There's never, there's never any obligation. There's never any feeling like, oh, you gotta, use me. I'm happy just to be a resource if they want to compare with another lender and say, hey, just bounce as many questions off me as you want. I'm happy to answer them.
Well, and I hope they will do that because I've known people who have already been working with a lender, whether it's the preferred or just someone they knew or whatever it was, and then they've talked to you, and whether they moved over or not, they were at least enlightened to there are other options out there, and so a great resource no matter what the situation is. So again, thank you so much.
Thank you.
If you have any questions, give Todd a call. If you have any questions about real estate, give me a call. Again, all I want to do is just provide good value to people out there. Whether you buy or sell a home through me or not, I'm always available to answer questions. So give me a call, send me a text, send me an email, carrier pigeon, whatever you want, and I'll do my best. So again, thanks again.
Thank you, Matt.